Greetings, friends. Welcome to the Truth About Real Estate Investing show. I'm your host, Roman Cito, since 2016. I live west of Toronto, and I've been a landlord since 2005. We have an excellent guest expert who owns 12 apartment buildings, where each building has about 20 to 30 units. And he's just acquired two sizable properties in Alberta, and you'll want to hear why he's buying in Alberta and why he's sold in Ontario, and why he plans to be buying in the States within 12 months. Mike's journey of immigrating to this wonderful country at the age of 10 with his family from Poland. And when you hear what inflation was like in Poland when Mike was growing up, needless to say, it made sense to leave, come to a country with much more security and stable currency and economy. Needless to say, Mike Beer has done very, very well for himself, considering where he's coming from. But first, I'm not going to lie, I quite enjoyed last week as the kids were at overnight camp. Cherry and I were empty nesters. The kids were up in Muskoka at a rustic camp where they slept in cabins without air conditioning, but they did have a bathroom with plumbing. However, the campers were responsible for cleaning their own bathrooms. No smart devices were allowed, so no iPads, cell phones, let alone laptops. Just good old-fashioned camp activities like arts and crafts, canoeing, swimming, ping pong, outdoor ping pong. Kind of interesting. They even had motorboats at this camp, so my son was able to go kneeboarding. And it's not something I've ever done, let alone go to overnight camp. And he loved it, so I'm happy to hear that. This is now the kids' fourth year at overnight camp. It's always been important for us for the kids to learn how to rough it a little bit and be independent. And they're enjoying it. They enjoyed it so much that they've asked to go for 2 weeks next year. So 2 weeks of overnight camp. Cherry and I are proud of our kids. Of course, they complained about the 30 mosquito bites each that they got, yet they still want to go back. And then minor parenting when my son's camp counselor said that he was the best behaved in their cabin group. So again, needless to say, we're proud of our kids. Our investment of our time and effort is paying off. No different when you invest time and effort into real estate investing. We will continue to invest in our RESP, real estate savings plan. I have at least one house per kid in the USA. I have no intention of them living in them. These are straight investments to me. If they decide to live in them one day, that'd be just an added bonus. Of course, we are looking for something less hands-on. The truth about real estate investing is the younger generation is not that interested in being investors in my experience. I see it in the adult children of my clients. Less than half of them have any interest of doing what their parents do as active investors in Ontario. And then just what I'm noticing, and I've heard it from experts as well, especially folks in education, the younger generation wants more balance. They want less stress. And from a real estate investing standpoint, who doesn't want much better numbers and less risk? Which is why I'm divesting my local properties and buying American. So what did Cherry and I get up to while the kids were away? Would you believe I golfed more that week than any other week in the summer? Add to that, on Tuesday, I went boating with my entrepreneur organization mastermind group, which we call Forum. Everyone had a turn at water skiing but me. I never grew up with a family cottage like my friends. I never learned nor felt, and I do not feel the burning desire to to get out of the boat. They're a perfectly fine boat, get wet. And also a good friend of mine got hurt recently while water skiing. So anyone who knows me knows I'm pretty risk averse. I am somewhat active and athletic, but again, why would I get into a cold lake when it's nice and sunny and warm in the boat? Yeah, booting around Friday Harbor and conversations with my buddies, it was plenty stimulating. In breaking news, my friend Musa sent me this article as reported by the Globe and Mail. Yet another real estate club organizer, this time Daniel St. Jean of the Right Club, REITE Club, an organization co-founded by Daniel along with other influencers that anyone who knows the Right Club knows who the other organizers are. He has received a stop order. Again, I'm quoting the article, so this is not libel, even though people want to threaten me with things. Again, there's a stop order from the Ontario Securities Commission, which is the regulator of investments in Ontario, the highest level. From the article, Daniel has raised more than $25 million in promissory notes. Link to the article is in the show notes. If you don't, if you're tech savvy and you don't have a Global Mail subscription, I actually have an Apple News subscription as well. I have both. I have Apple News subscription and Global Mail, so I'm able to access it. I can't recommend enough the Apple News app. It gives you access to so many news outlets. It's a very good value in my experience. And if you don't, you can just Google the article and you'll likely found the version without a paywall. Anyways, Kyle Ford, who's a past guest of the show, he manages $150 million in private mortgages, and he said on the show, promissory notes are a bad word at his company. Friend of the show, Ron Butler, who has an interesting vocabulary. He's extremely against the use of promissory notes, saying they're worth less than used toilet paper. I paraphrase. Me personally, I lean towards the more conservative side. Hence, I don't private lend, nor do I borrow. Again, as we've tried to bring back the term on this show, these used to be called hard money loans before they were ever called private money. Anyways, it's a scary time for folks who have primarily lent on these complicated repositioning and development projects, let alone business startups. I've heard too many stories from friends who have lent money, hard money, with rates in the teens, so like 12, 13, 14, 70%, only to have their borrowers not return payment and ghost them. This is actually going on pretty a lot in several communities. However, I actually have some friends who've been in the business a long time, who one friend mentioned this to me, and he's been lending to flippers he knows personally, people he's known for years, and he ran into this problem recently. So folks, never forget, return of capital is something that needs to be evaluated before you do any risk. Will you get your money back? Because I always personally live with the quote, the very, very famous Warren Buffett quote, 2 rules of money making. Rule number 1, don't lose money. Rule number 2, see rule number 1. So avoid losing money. It's such a terrible thing to happen when investing. To me, there are better options out there, as discussed by past guests of the show, like Tim Collins and Calvert Mortgages. I've posted links to both episodes in the show notes. In the Calvert Mortgages episode, near the end of the episode, I asked my guests how they personally invest their own money, and if you listen, I think you would agree it's a much more diversified and secured investment versus lending on individual properties and individual investors. On to this week's guest. Mike Beer is an owner of a real estate investment company called Mike Beer Investments. The website's mikebeer.ca, and beer is spelled how you think it is, like the beverage, mikebeer.ca. They have developed an investing system that has been working for well over a decade, and invest in apartment buildings in Canada, Ontario, and more recently Alberta, as he mentions on this show. His mission is to enable each of his investors to provide their families with a financial future they truly deserve. In the past, he was a professional ski instructor and scuba dive master. How cool is Mike? Now he focuses on coaching for charity, ice water plunges. Yes, not just ice water plunges. Mike walks into Lake Ontario in the winter. Health, obviously, and loves personal self-development. Again, the website's mikebeer.ca. Please enjoy the show. Hey, Mike, what's keeping you busy these days?
Hey, Erwin, how are you? Thanks for having me here. I'm pretty excited. Been looking forward to this for a while.
Me too, because we've known each other quite a while and have a lot of mutual friends, and I think the community in general needs to hear more positive news, and that people can get ahead quite well in real estate investing.
I met you many years ago, and then I still remember. I don't even know if you want me to say this on the show.
Oh, boy. Go ahead.
No, it's a good thing.
Okay,
you were at these rain conferences with your Mr. Hamilton shirt.
Yeah.
I can't get that out of my head. My wife said, like, who are you seeing? Oh, you remember the Mr. Hamilton guy?
Oh,
who now has moved on many, many, many times and grew as a businessman, right?
It's been a fun journey. Yeah. But we're here to talk about you. So tell us about yourself. And this is the truth about real estate investing. Like I said before recording, tell us about your investing.
So right now I'm an apartment building investor. We invest primarily only in Canada for now, mainly focused around multifamily properties, and we essentially purchase average properties with investors and then turn them into pretty amazing communities. Mm-hmm. So that's the goal, and then make some money along the side for investors and their families, and then hopefully get their get them to realize their dreams.
Mm-hmm. And part of the reason why you're here is because you've done well, right? And again, I know you're not in the community as much as I am, partly because I just hear all the negativity. But, thanks for being a discerning investor and being at this for a while. You've done quite well, have you not?
You know what? I never. It always surprises me when someone says I can do well, because I don't necessarily think of it. I haven't done well, but I kind of focus on this is pretty normal right now, and then I focus on the future. Yeah. But thinking back is a skill. So yes, I should be thinking more about all these things that have happened, and all the lessons have led me to where I am today.
And you described your current portfolio as 12 buildings. So you have over 300. How many units do you have then?
So they average between average 20, 30 units, and then now we're buying 50 plus unit buildings.
Right.
Yeah. So right now we're actually selling some stuff off, and so the portfolio has shrunk a bit, and then we're building quickly too. So
right.
So going through a big shift right now, yeah.
Right, so you're well over 200 units.
Right.
And then take us through the journey. What was your first income property?
So first income property,
the year. Sorry, go ahead.
So over 10 years ago, I'll tell you more about my most interesting one of the first income properties. So my wife has this friend. He's a realtor and then they went to McMaster University together, and we met for lunch with a bunch of them. And then he, casually sitting down with him, and he said, "You know what? I have 43 tenants." I thought, 43 tenants? Mm-hmm. How do you have 43 tenants? I love it. I want 43 tenants. And it turns out he was investing heavily in student rentals since he was fresh out of university. So right away, within the next, I would say, next week, he took me to see a property, and he said, "We're not buying, we're just learning." And at the time, I was working pretty hard in the consulting world, traveling around a lot. I think making some pretty good money. Mm-hmm. But from the early age, I saw kind of my parents play the flipping lottery, and I hate the lottery.
Lottery tickets?
Lottery tickets. Oh, yeah. Because they were immigrants, and so was I. Yeah. But whenever I asked about their future, retirement, we're going to play the lottery and we're going to win.
they're betting there.
And then so I refused to play the lottery. It's God. Just so I wanted to just secure my financial future. That was the goal.
Wait, I think you're more likely to hit by lightning than win the lottery, I believe. I think that's the stat.
Right.
Okay. Sorry, continue.
So the plan was, retire at whatever, 55, 60, and then live the dream. So that's why I started kind of buying properties. So we went out to buy look at triplex, which was actually fourplex, and it was an illegal fourplex. It was a legal triplex in Hamilton. And he said, this is your first property we're seeing. We're not buying, we're just learning. I looked at it and looked at the numbers. I like it. I'm buying it. Mm-hmm. First one. Mm-hmm. And then I bought it. Mm-hmm. So that was the first fourplex I bought. And then we kind of bought another couple of student rentals within months, because I refinanced my property, my home, and kind of went all in. Mm-hmm. And then my wife was kind enough to be very supportive. She said, "Sure, let's do it." Mm-hmm. And that's how that kind of started, actually pretty quickly.
Okay. Fantastic. Were the student rentals all around McMaster, or?
Yeah, around McMaster.
That's been a gift to many investors.
You know what? They seemed expensive at the time.
Tell the listeners what's expensive.
It was like 300 something thousand. It was like 350,000. Crazy high prices for 7 bedrooms or 8 bedrooms and such.
And then for context, I sold my 7-bedroom for over $860 recently. So
okay.
Yeah. So yes, compared to today, 300 doesn't look so bad.
Right. But it happened pretty quickly, and then from there on, I thought, you know what, I can do more.
Yeah.
Yeah.
And then what was the transition? Like, because then when did you start doing apartment buildings then? So
then it's just like I joined some real estate clubs where kind of met you as well. I bought like a 7-plex in London, and then and I met a mentor of mine where he was kind enough to educate me through. Actually, I met him, but he wouldn't take me on, so I kept harassing him.
Nice.
Hey. He's like, no, I don't have any mentees right now. I kept at it, and then he said, finally, fine. You got to pay all this money up front, and then you got to pay monthly. Like, so he's actually setting up barriers, so I don't, like, I don't get coached by him. So he was kind of like seeing how much I'll resist before I'll like give in. But I said, sure, whatever amount of money. Like, I want to be like you, Mr. Billionaire here.
Yeah.
So
can we shout him out, or we need to keep it private?
Oh, absolutely. Yeah. Yes. So my mentor is Brian Pullis, and then he's I liked him a lot. We connected really well because he's very humble. He immigrated here. He had a furniture store where I think he struggled with his partner and such, and then grew this massive real estate portfolio. So very inspirational, but very down to earth. And then I think we have a lot of the same kind of qualities, where we're not like we don't really love shouting from the mountaintop, but we're more kind of reserved, yet ambitious and driven.
Right.
So he's kind of helped me a lot to kind of transition into larger and larger apartment buildings throughout. It took a while, and then I was fortunate enough, like when I first started mentoring with him, I just asked him, so what do we do? Like, what's step 1, 2, 3, 4, 5? Well, like, what's the recipe? I want to become like a big investor now. And he said, no. You got to build your own journey. Like, this is going to be about you kind of building your own journey. And I thought, why don't I just follow your journey and just make it happen faster? But it doesn't work like that. So with him, we kind of worked on progressing on this journey so that it's fulfilling and it's the right thing for me at the time, and then so I can build on growth and continue to grow instead of just doing something stupid fast right away and then failing and then not picking myself up.
Yeah, people forget the old Warren Buffett quote. Rule number 1:
don't lose money.
What's rule number 2? Rule number 1.
Yeah.
Because I mentioned that because people are losing their shirts left, right, and center these days. But for context, for Brian is, I think, possibly the most successful real estate investor to come out of our community back from the rain days.
Absolutely. So that's the way I kind of found him. I thought, who's the most successful real estate investor I've ever bumped into? Let me see if he can mentor me, right? So that's. But I think what's most important, and I kind of realize it now, there's got to be like a fit with the mentor. You got to have kind of similar values,
right.
And then
I think Brian can
gel
work
well
with pretty most people as long as they're good people.
Yeah.
Right. Like, Brian's a good person.
Yeah.
Yeah. It's crazy because I watched that journey. Like I've known Kyle since he was in university.
Oh wow.
His son. Oh yeah. You remember those days? Like, I remember Kyle was telling me about the student rental property that he lived in that they owned. It was like absurd. It was like more than 10 bedrooms in Waterloo, in Waterloo. But loved the hustle, and that's why I tell people, like, you're sending your kid to university, buy the house, make them the landlord.
Yeah, I didn't do that. Yeah.
Well, look at him now.
Yeah.
He's running the biggest REIT among anyone we know personally who started it themselves.
Yeah, they're very successful in a
Right.
good way.
And they're did they qualify as a private REIT because they don't publish what they own? What, like, you know this world better than I do.
They are on an exempt market.
Yeah.
Meaning they offer, they're like a private,
Yeah.
like they're available to the public
Mm-hmm.
and through exempt market dealers, but they're not on a stock market.
Yeah. Well, but my point is that like their reports aren't available publicly, so let alone their portfolio.
Right.
I can't really look into it, which is actually smart of them, because we won't get into that. My point in this my point in this is that he's highly qualified, right, to coach mentor like the Polises. Right?
Yeah. And
that's
then
who you got.
that's a way to accelerate your growth pretty quickly. Because one thing, I think, one of the biggest things out of coaching for years that helped me wasn't like a strategy or a book or or like a long coaching session where things are laid out on a map. It's like a split second of a comment. So I said, this is in the beginning years, Brian, I want to make this much. Like, I want to get to this. And he said like this, he goes, that's it? And he laughed. And because he thought it was so achievable, so almost funny, and I think he did it on purpose. He wasn't laughing at me. He was trying to drive a point with a comical way. So that's it? And I thought, okay, so if he's laughing at it, that means I can do it.
Yeah.
That one little thing, I think, was the most impactful thing he said that kind of changed things for me.
Yeah. He basically gave you confidence.
Right.
Yeah, because he's a pro. He's a pro's
Yeah.
pro.
Yeah.
And he could quickly tell you were thinking way too small. I can appreciate that. Now, like, can you explain some of the challenges from going to student rental to going to apartment building that you had that coaching helped you get through?
I think so. I did things gradually. So
Good.
I went. I didn't do this kind of crazy journey where I go from 5 to 100 units.
Yeah.
It's
And borrowed
more-
all private money.
yeah. With the OPM, which I despise that term too, because a lot of people say, like, I just heard it at a conference. Oh, OPM this, meaning other people's money.
Yeah.
But it's like OPM. The reason I don't like it is because it equals people's life savings.
Yeah.
And they care deeply and they've worked extremely hard for that money.
Yeah.
So leveraging other people's money, I took a lot of time to make my own mistakes before I ventured into leveraging investor money, because it was just so important. Integrity is key for me, and I wanted to do everything possible to learn and to respect other people's money before I use them.
Yeah. Like, prove the process.
Yeah.
Right? Like, cut your teeth with your own money before you bring it to somebody else.
Yeah. So I kind of went linearly, right? So I did like 7, 13 units, 17, and then up and up and up.
Then how'd you fund them without other people's money?
So eventually, by the time we got to the 17, first we took some loan money from like private investors. But I backed that with my net worth, and then after we started doing equity deals.
And then, at what point did you start selling the smaller stuff to trade up for bigger?
You know what? That's kind of not too long ago.
Oh, okay.
I seem to be waiting for cycles, but now we're selling like smaller stuff because we're trading up for bigger.
What do you consider smaller stuff?
So anything under like 20 units.
Okay. Majority of the audience is beginner investors, so none of the 80% would own a 20 unit. So that's why I laugh.
But holding
Adam
on
here doesn't own a 20 unit.
But holding on to real estate is great. So I wouldn't sell them if I didn't want to, if I didn't have to, or I didn't have a bigger opportunity elsewhere.
And that's what I've always told clients, like this Monopoly's won by owning real estate and charging rent. Right? Could you imagine playing Monopoly and not buying any real estate and just trying to avoid paying rent and going to prison and just collecting money at go?
That seems to be what most people do, right?
But you're doomed.
But not people here, right?
Not people listening, nor will they be. But like you'd be doomed if you weren't a property owner in the game of Monopoly.
Or imagine not collecting rent and then just having negative cash flow and continuing through that cycle.
Yeah, that sounds even worse.
Right?
Yeah, so you found better opportunities then. So what are these new opportunities that you're selling off? You're divesting. So tell me about why this process? What made you think you need to divest some to, and what is the new venture?
So when I previously purchased these smaller properties like the 7 and 12, and I thought, why is the owner leaving some kind of like room on a table? Like he could have positioned this property better or improved the units and such. And then now I see why, is because I have some properties which we're selling off. They're not 100% fully renovated or turned over or beautified, because we have other properties that larger deals where we can make more money faster, right? And I think that's kind of key. We're trading smaller for larger properties. So Ontario has been on a good run for a while, but I would say last few years has been very tough for a lot of investors. So you can sit and wait this out. It will get figured out. I think properties will do well here in Ontario in time, but I don't know if I have that much time where I'm willing to invest a bunch of more years to wait for some of those properties to fully achieve their peak, where elsewhere in Canada and in the US, you can invest that money and be on a trajectory to really realize value. Because there's some economies like in Alberta where I think that cycle is just beginning, the good cycle, and there is really economic demand, which makes sense. So like in Ontario, previously, 50% of immigrants used to come to Ontario, and then 50% rest of Canada. And that has shifted, so now only a third, and you can correct me if I'm wrong, it's somewhere around a third only comes to Ontario and 2/3 elsewhere. Yeah. Because Ontario is very expensive to cost of living. Yeah. So if you can cut your rent in half and then live in Alberta and then also increase your income by 30-40% and cut your taxes, who cares if it's cold? Right?
You're Polish, that's different.
Right? Life is...
My family's from Hong Kong. We're tropical people. Speak for yourself.
Fine.
But you're talking like economics, high level stuff, but I imagine you see it in your own buildings. Do you see less demand? There's less rent growth? Like, because again, you have property, so you have your own data. Like, what are you seeing with your own portfolio? And also, and then your portfolio is mostly Kitchener, Waterloo, Cambridge area?
Kitchener, Waterloo, Hamilton, London, and then a little bit in Toronto.
Okay. And are you seeing resistance for continued rent increases? Like, what are you seeing?
So the rental market has softened. Like, we're getting lower rents that we were getting last year.
Oh, we've receded. Oh, we've gone down.
Yes. In Kitchener in particular. And then also in Hamilton too. For nicely renovated units, we're getting maybe, I would say, 5 to 7% less rent now. And it takes, vacancies are longer as well.
What's vacancy now versus last year?
So last year we had lineups of people.
Oh shit!
Okay.
I'm French.
And now we have tenants. Oh, you know what? I'm looking at 7 other units today, so I'll think about it.
Wow,
so
there's not much
I would
supply.
say yes, because we're targeting tenants at the top of the market.
Yeah.
Which so they have a lot of choice.
That's interesting.
Too. So there's softening of that, and then also in terms of buildings and such in Kitchener, Waterloo, Hamilton and such, it seems to be more of a buyer's market than seller's market, right? So all that put together, Yes, the interest rates have gone down a little bit, but there is quite a bit of uncertainty there.
Fascinating. Because what I'm seeing in the small investor market is from the resale market, most investors are selling right now. More are selling than buying, for whatever reason. And then, for small real estate, the best practice is you sell it vacant, right? So my point though is that, if existing landlords aren't trying to rent their properties, that would make you think there'd be more renters for your buildings, right?
There seems to be more demand. There's demand that I would say is equal or greater, but seems to be a lot of product on the market available for rent this year.
Right.
And this just happened from the beginning of this year. Like last year was a completely different story. So it's shifted quite a bit. I don't know how long this will last, right? Like it's cyclical.
It's interesting. Well, just anecdotally, I keep hearing the topic of Alberta coming up, as in young people. That's where the young people generally I hear either going to Alberta or the States.
Okay.
Right. It depends on their what kind of job they're in. Right. And I posted something on my social media about where are millionaires going. Right. So number one is Dubai. Right. I think number two and three was either Singapore and the U.S. Number four was Canada. Right. And I think it's largely what your background is.
Yeah.
And I mean, without a better way of saying it, color of your skin, that's usually where you end up.
Okay.
I my listener knows I love everyone. I mean no offense to anyone, but that's just anecdotally the trend I see. Like if you're of a certain skin tone, that you go to Singapore. You know what I mean? I think people know what I mean. Well, again, let me explain that. Like Chinese, because of what the Chinese government did to Chinese people, like with the lack of freedom during the pandemic, a lot of them are going to Singapore.
Okay.
Right. So culturally, and then even here, like Asians, if they're looking to move, Singapore often comes up. Anyways,
I worked in Singapore. I love it. It's great.
I love Singapore too. I don't know if I'd go back.
I wouldn't live there. It's just too hot for me. But it's
you like cold.
I do. Well, sometimes hot, sometimes just a mix.
But I digress.
But for newer investors, right, there's a lot of money to be made in Ontario. So if you're trying to buy a single unit, right? Why fly out to Alberta and then look for stuff and then it's going to be expensive. Why not look for an amazing deal here? Because you probably have a lot more time than like a larger investor. Yeah. Right. So the market's not dead. It's just there's a little bit more work to be done here to make money.
That's a tough one. Explain to me what would the single unit look like? Like what market, what price point?
So I don't buy single units anymore. Yeah. But I'm thinking anything where you can get really creative around building value, right, into a property. So no longer just buying a single family home and renting it, but adding multiple suites, right? That's become easier in Ontario, offering some kind of like extra services on top of that.
So I'll release this soon. I've already done the math behind it. So my perspective for investors locally, if they're going to buy a duplex, you're paying somewhere around $800,000. It'll rent for somewhere low $4,000, right? And then you work out the math, fully loaded expenses. Fully loaded expenses, what a projected financial report looks like, because you actually know what expenses are.
Yeah. And then I've done them for apartment buildings, but I haven't done them for like duplexes.
Right. So commercial investors, cap rate. And anyone listening to this show needs to know what a capitalization rate is.
Absolutely.
Right. For a duplex, the capitalization rate for my numbers, and they're pretty conservative, but it's about 4.5.
Okay.
Right?
Yeah.
Versus the house I bought in San Antonio is 5.1.
Yeah, right? That's a big difference.
Big difference, right? Yeah. And I'm talking about a $800,000 property here in Ontario versus I bought a property for $265,000 American.
That's awesome.
Right? And I only have one tenant. Does you have experience with density? Most duplex investors know your usual biggest problem is the tenants conflicting with each other.
Exactly.
Right.
So that's what I experienced when I have that fourplex. Is
Yeah.
the tenants started fighting with
Right.
each other, and then
Yeah.
I figured, oh, okay, so they have to be kind of similar
Mhm.
in terms of tenant base. They
Mhm.
you can't have like an older grandma and then students living
Mhm.
and a couple with kids
Mhm.
together, because they're going to be fighting,
Mhm.
right?
Mhm. So then for my research, that's why I'm okay going back to single family. Like, I'm happy to have this conversation offline with you, because I know you're like researching the States. So America Housing for Rent, which is one of the biggest REITs in the States, they were asked the same question, because they do a lot of building. They develop their own rentals. So the question was naturally asked, why don't you build more multifamily? And they said, we're building what's scarce, and that's single family detached.
That makes sense.
Right. In their experience, again, this is one of the biggest REITs in the U.S. In their experience, they're saying that with multifamily, their vacancies are longer, and then they have to give up more rent concessions, meaning what free rent or renovations in order to attract a tenant to take it, right? And this is from a REIT, which is a very capitalist organization.
Yeah. And then they have everything calculated. Absolutely.
Exactly. Right. They build like over 300 houses a year. Like, these folks are not insignificant.
Like, I love all real estate.
Oh, I do
what?
too.
Like, I've made money on single family,
Yeah.
on the triplex,
Mhm.
on multifamily, on some commercial too. Right? It's just, what do you want to specialize, which direction you're going to.
Yeah.
Like, we have some commercial, but it's more by chance, because we bought a building and there's some storefronts at the bottom. But they have, again, longer vacancies, and my team doesn't specialize in that space, so we kind of treat them as a little stepchild, right?
Right. And then your valuation, your underwriting has to account for that.
Yeah, there's
A
a
longer
mix.
vacancy.
Yeah.
Right. But you're a pro, so you can do this.
Yes, but sometimes I just let it be a little bit.
Yeah.
I could probably run those commercial units much better, but they're only a couple percentage of our entire portfolio, like 2-3% of our entire portfolio are the commercial units.
Right.
So you got to kind of focus on the main thing to make it happen.
Right.
Because as an investor, you're battling every day with noise. Right? There's stuff happening here, stuff happening there.
Yeah, you have well over 200 units. I'm sure there's lots of noise.
So like, for me, like, when first half of my day, I don't typically do emails. Like, I don't look at my emails. I tell people, I'm not going to answer calls. I got to do what I need to do, and then get the biggest things done during the day. And then I'll look at my email and get a bunch of like operational meetings happening and all that stuff. Right? Because otherwise you're just distracted, and then you're not going where you should be going. And some balls will be dropped, right? Here and there. But the kind of key things will get done.
Yeah, there's no perfect.
Focus.
Yeah. My point though with the commercial unit is like you properly underwrite it, knowing it's going to be like 50% vacant or whatever.
Yes.
Right?
Yeah.
Because my point is that I think many novices don't account for that correctly, because they don't count for vacancy correctly on commercial units, especially if it's like retail or office.
Absolutely.
Right? The deal has to basically work if that thing's vacant.
But because it's such a small piece of our portfolio, our team is not the best at kind of managing lease ups and vacancies around commercial units. So I know that's not our strength. So we're probably going to have a little bit more vacancy on these commercial units than someone that's a lion's share of their portfolio. Right. So there's a bit of uncertainty there.
Tell me about what it is. Give me some broad or high level view of your portfolio. Is it like more suburban? Is it more urban? Are these along like major transit lines?
So I typically like bigger cities like Hamilton, Kitchener, London, as close to something, meaning transit lines, close to schools, depending on the tenant type we're trying to attract in that location. We have very few student rentals. I don't focus on those anymore. So it's all families, and ideally like working professionals. So then, because if you purchase an asset in a bigger city, there are many ways you can dispose of that asset later, meaning you can sell it. There'll be buyers. But if you purchase an asset in a small town, it may cash flow, may have better cap rates as well. But then what's your exit strategy? And then are you going to find a buyer for it? Are you going to find a property manager? Are you going to find a handyman? Are you going to find an electrician? Because there's probably 2 in that town. Who knows? So I like the certainty of a bigger city, bigger economy that's kind of even close to other economies. Like Hamilton, great, right? It's close enough to Toronto where people can commute, and so is Kitchener. It's got the universities, University of Waterloo, Laurier, and then other colleges and such. So it's almost like it's all connected and in a desirable place where people like to live. Like one of our properties is close to like a big, large shopping mall and then an LRT in
light rail transit, which is like kind of like the streetcar.
Right. Yeah. Which is key. So we get a lot of tenants that don't even need to own a car, and they can get to get around without it. Very attractive.
Yeah. Who wants a car? Parking's expensive. Traffic is bad. And then how do you know you found a deal? Because I bring this up because that's often a mistake that new investors make, is they can't identify a deal and they get into a bad deal. Like you get into a bad deal, you're in a lot of trouble.
So you know what confuses me about a lot of investors? They say they're not good in math.
Yeah.
And
boy.
and then they start buying deals. I don't know how they do it. I just literally don't. You don't have to be great at it, but someone does, because the realtors, the pro forma they give you, it may not be exactly the reality.
Wait. How many realistic pro formas have you seen from a realtor?
0. 0.00. So that's the scary thing. I think if
that's Mike's words, not mine.
No, I think
I joke because I'm licensed, right? You're not.
That's the standard out there. That's what's done. That's common. Everybody knows it, and then that's the world we live in.
Yeah. My point is that not everyone knows it. That's why I want you to say it. Yeah.
So
this is the truth about real estate investing, and my experience is very much similar. I can't recall a pro forma I didn't have to make adjustments to.
Yeah.
Which is typically always adding expenses and vacancy allowance.
Yeah, because somehow if they're selling a new building and an old building, it seems like the repair and maintenance is the same, but reality it's not. Right? Aging infrastructure, plumbing, electrical, things will happen.
100-year-old property with like a tiny repairs and maintenance budget.
But also, I can't connect with people that don't want to do math or don't understand math, because I've always been good at it as a child, and I went to University of Waterloo, got a bachelor's of mathematics and then computer science. So like when I have my big screen, it's 32 inches and I have 600 numbers on it, my wife looks at it and she goes, what do you see in there?
The Matrix.
The Matrix. The Matrix, exactly.
Because I know how to read this.
Yeah.
I know I can predict the outcome.
The numbers they speak.
Yeah.
Right? Versus like the nicest pro forma. So a lot of so when you're buying a property, whether it's big or small, you'll see typical expenses. They have to give you the actuals: property tax, utilities,
rent roll,
which sometimes is not even true.
God.
So you have to kind of check it because they may project that the increase in a few months, so they kind of bring that in. So you have to verify the rent roll because it may not be actual, or they may be projecting vacancies to be rented for this amount, but they haven't rented it yet. So, but just kind of understanding the type of properties you're buying, because so that's why I talked about commercial units as not our primary, I would say, expertise. It's more multifamily, because it just seems so many performers, so we know how they're going to perform, whether if it's an older building, townhouses, or newer, they're going to have different levels of expenses. And just making those realistic. So you have a realtor pro forma, then there's a pro forma that your mortgage broker will do, which will be different, more realistic, and then there's one that you're going to do.
At least, yeah.
More conservatives, and then the one you're going to do. Mm-hmm. So not to confuse people, but yours is going to be most realistic out of the three on what's going to happen.
Yeah. And you have to be sophisticated to come up with a realistic forecast.
And just just see a lot of performance, see a lot of properties, how they actually perform.
Yeah,
versus,
actuals, yeah.
Yeah.
Yeah, because then the more actuals you see, the better you can discern what a property will do.
And it's especially common in smaller properties for sellers to not disclose the, a lot of the things that have gone wrong or issues that have gone on in the properties, right?
Yeah, so you have a better dose of reality than a novice would, which is okay. Everyone's got to start somewhere.
Yeah.
But just, verify.
Yeah. Look at it. Look at the ceilings. Do you see any stains? Have the roof's been leaking, right? How old is the building? Like if I bought a building from early 1900s and built in 1913. Okay, so we have a lot of, like, the operational costs are significantly more because of the wiring, because of the plumbing. I mean, things happen a lot more than they do in a newer building. But so I was fortunate enough to kind of understand math from a young age, and then until this day, it's kind of the best skill. And I thought I made a complete mistake. I should have went to business school. But it seems like it's much better. That
I think it's all good, and you can always do business school later. But like, to your point, like, people who can't do math, and like, I'm sure you've seen deals, and I've seen deals, and I can't believe someone did it. And like a property for sale or a deal, and I see deals get sent to me because people are raising money and whatnot, and I'm like, I can't believe they did this deal.
Yeah.
Someone can do math along the way.
But everybody's can learn it. I mean, it's not rocket science, right? Like, a little bit of dose reality plus some numbers, and then boom, comes out. Like, does this make sense?
Yeah.
And don't try to tweak it till it makes sense.
Oh,
because if you sit there for 2 hours, you'll tweak it, and then convince yourself it's a good deal.
Yeah. Now, you mentioned you're divesting some in Ontario, and I don't think we mentioned it yet, but you have 2 deals in Alberta you're working on. Can you explain? So I think you already touched on why you're divesting Ontario, and tell us about what you're doing in Alberta.
So we're shifting our portfolio because I think that Alberta is at the beginning of a good real estate cycle. So not only the rents are lower, but also the incomes are higher. So it's just economically, it makes sense. And then you can find properties that cash flow, which it seemed like in Ontario for multifamily properties, it became more and more difficult. And then actually the execution of a business plan here in Ontario, because there's a lot of uncertainty around landlord-tenant board and tenants and such. So it's less predictable on if you can execute on lifting a building's value here in Ontario. So that's another reason of starting up in Alberta. And then I think in about a year we'll start working in the US as well. So demand, like common economics, and then also predictability of execution of a business plan, because when we're put a deal in front of our investors, we want to be sure we can execute it, and there's as few of things that are out of our control as possible, which seems like in Ontario it has changed. Kitchener-Waterloo has changed substantially over the last 12 months, and there's a lot of pressure on landlords.
Like what kind of pressures?
To not increase rents for new units, to not turn over units, so basically they're discouraging landlords from investing into infrastructure, into buildings.
Well, not to get paid for it. not to. Because above guideline rentals, like, I can't believe how much negativity there is in the media about above guideline rentals that the LTB approved, the tenant-friendly landlord-tenant board approved above guideline rentals, and then people resist them.
Absolutely. And then, utilities.
Someone else needs to pay for my balcony. Someone needs to pay my parking lot, my roof. I don't have a car. Someone else should pay for the parking lot to be roof finished, not me.
and then at the same time, the city funds these kind of campaigns too. But the utilities and property taxes, all that stuff has gone up.
All right. In a rent-controlled environment.
Yeah, and so it's become, I would say, one step even more difficult. So that's the reason,
right?
Because we're trying to execute on a business plan, a good investment where we can remove some of the uncertainties.
Right.
And then also, I'll tell you, I'm looking forward to having a great relationship, a much better relationship with our tenants, meaning like a business and then provider client business relationship where we're appreciative of them and they're appreciative of us. So that's beyond the numbers.
Yeah. Well, I mean, before we move on from the numbers, like with rising costs of operating your business, then your cash flow and profitability is reducing.
Yeah.
Right. So it's becoming less of an attractive business, and you're basically you're saying it but not saying it, but tenant landlord relationships aren't nearly as good as they used to be.
If you can have customers that appreciate you, why not?
Oh yeah, life is short. I say it all the time. Life is short. Right. I tell novices all the time, like, life is short. Like, choose who you want your customer to be. Tell me about your customer, and then build a business around that.
Like, I'm all for working hard and then doing stuff and continuing to kind of like go beyond and doing the hard journey. I'm all for it, and I've done it for a long period of time, and I came from kind of my parents and my upbringing. But there is a point where there is a business decision that needs to be made. Does this still make sense?
Yeah.
It's not my ego talking. It's not fear talking. It's more about how can I make money and have a better life,
Right.
and enjoy
Right.
more what we do.
And this isn't just you. I imagine your employees would appreciate a better customer relationship.
That's even tougher, actually, putting your employees in positions where they're facing kind of adversity and such on a daily basis.
Yeah, I agree. I'm gonna go somewhere else. Well, I already started. So tell us about Alberta. Tell us about what these properties are like.
So we're buying 100 units there. So it's a couple different properties. One is like a townhouse complex, and another one is a value add multifamily building. So that's so those are the first two, and we're looking to scale that up pretty quickly. I think I've spent a lot of time thinking about and talking to investors about what they want. And the old model was more about, hey, how can we increase value to properties in Ontario, and then boom, within 3 years, 4 years, or 5 years, get your money out and then sell the properties for a great profit. But that 5 years seems to go by so quickly. Like, you think 5 years, okay, I'm going to be able to do all this stuff, but it goes by so quickly. And then who knows where the market will be in 5 years. Where in Alberta, we're focusing on cash flow from day one, because I think there's a lot of certainty when investors get cash flow from day one. Try to accelerate the return of their initial capital as quickly as possible, and then we're going to hold on to the buildings forever, which is unheard of because everybody's used to timelines. But once you get your cash back and you're getting cash flow,
you love your ROI.
Then forever seems like a good thing,
Yeah.
right? Because that provides family with income, replacement income, whether you want to stop being where you're working, right? I just met a friend of yours that was a teacher, and then he's got his income replaced, which was a powerful story. I love that.
Yeah, I love it. Yeah.
So that's kind of it's offering 2.0. That's where I'm going with. So this whole shift is with investor in mind. How can I bring more certainty and then bring more cash flow, bring more income to them for infinite periods of time? So that's where that shift came from. It wasn't, oh, it's too hard. I don't want to do this anymore. I wake up at night thinking about, if this plan will. No, none of that. It's more kind of investor first, and then, oh, by the way, this sounds like actually a pretty good plan. So that's what we're doing now.
And then these properties, they're existing, or are you building
existing
new? Okay.
Yes. So both existing. Townhouse complexes existing, and then apartment building. So these are the first two.
How old are they? Is this a value add?
They're both value add. One of them is about 30 years old, and then the other one's 10.
And for context, like that's a lot younger than stuff in London on Hamilton, Kitchener, or Cambridge.
Then the 1913 building.
Yeah. Yes.
You know, the city of London came back to me and said, "Oh, that's that property you have, the 7 units, actually only a legal duplex." I'm like, "How do you know?" It's been like that since I have rent rolls from 1970s that show 7 units.
Yeah. And then what they say?
They just stopped.
Just gave up? Yeah.
I don't know.
I'm not gonna argue with you, I guess.
Maybe when they hear this podcast, they're gonna come again knocking on my door. But how do you know? So yes, 1913.
In the middle of a housing crisis, you want me to kick out 5 tenants?
No, it's a good property. No, I like it.
No, I like younger property. Like I can't imagine who doesn't like younger property. Just with more modern building code, less capital expenditure needed up front.
You definitely need to be expecting surprises if you buy older properties. And they're not good surprises. They're always something breaks and something costs more. Operating expenses are higher, right? So you can still make really good money on older properties. It's just being an expert in that in the side of the business.
And these properties, what city are they in?
So Edmonton, and we're looking outside of Edmonton, and then also looking in Calgary as well. So kind of, I would say, a bit all over. But that's not the only solution. I think you can find good properties in many parts of the country. It's just what kind of environment do you want to be? Do you want to be in Ontario and BC where rent controls are tough? Or do you want to be in some of the, just like US, right? You have some more landlord-friendly states and then less landlord-friendly states.
Well, like you though, I prefer bigger cities just because I'm very risk adverse. I want to be in a bigger city so I have more people to sell to, more people to rent to, more people to sell to. Right.
You know what? I'm risk averse too, but I like sometimes taking leaps into calculated risks.
Yeah.
So when I was, I remember when I was 5, I think I was 5 or 6 years old, and then we I could barely swim, and my sister was a okay swimmer, and we were gonna pass like this. I think it's just certificates for swimming, so you can you could rent like a paddle boat or whatever, right? And back in Poland, so they said, okay, you're gonna now. They brought us to the pool. My sister and I, we stood on the Olympic-sized pool podium, and I'm like 5 or 6 years old, and it was pretty deep in there. And we were supposed to jump and then swim length and then back, right? And I only knew how to kind of float on my back. And then my sister looks at me. She's like, "Yeah, I'm not doing this." And I just jumped. So I jumped in the water. And then like I can see the bubbles kind of coming, and then I see this hand kind of pull me up, and the lifeguard kind of pulled me out of the water like this, and then put me down, and then started yelling at my mother, "How can you let this kid jump in the pool?" So now taking that skill and of leaping, which some people don't have, and then calculating risks around it. Is kind of sometimes what you need just to go for stuff, as long as it makes sense financially and with the economy and such. But there's like this kind of, I like bringing out this little bit of an impatient fire in myself, and then calculating around it, and then having the team verify, and then boom, going for something.
Yeah, so your risks are pretty calculated.
Right.
Going to the fastest growing province per capita, whatever it is not, that doesn't sound that risky where it's landlord friendly.
But a lot of investors will sit there and overanalyze and then overeducate and then just not pull the trigger.
Oh, and I think a lot of that is just inability to do math, right? If you can't do math, and if you're not a logical thinker, then everything it's harder to come to the conclusion to do something.
Yeah. But you can always partner with a logical thinker.
Yeah, a problem solver, right?
Right, with someone, and then go with them together. Leverage your skills, both of you.
Yeah, and we have your website here, and that's part of the point of it, right? Like you have the ability to, you do take on partners, like passively?
Absolutely. So we do everything on a project by project basis. We take on money partners, like credit investors, onto projects. And I think the key is that we try to keep our overhead as low as possible, so that we can give the investor as much of a return, as high a return as possible, while they're actual owners of the opportunity. Because I see that there are a lot of REITs out there, and the returns aren't amazing, and I see that a lot of their costs go into the overhead of the property. So why not be an owner but partner with somebody, and you leverage economies of scale of 100 units, and go through this kind of journey instead of I don't know. I'm not even going to talk about mutual funds, but instead of buying into something where you have tremendous overhead, so from day one there's already a little bit of a disadvantage, right? So that's what we kind of do. We do project by project basis, but the project keeps growing. Like, so now focusing on 50 plus units, and then sooner or later it'll go up from there.
Right. So I think we've established that you qualify as an expert. How do you structure the deal? Because I'm sure many people are interested in that. Like from the listener's perspective, they want to do deals like you do, so they want to know how they should structure the deal. What does the passive investor get? And some people are listening for being a passive investor, so they want to know what they get too.
Okay.
So what do they get?
So
are these hard money loans? Promissory notes for 17% interest? What are we talking about here?
No, none of that. So the simplest way to structure a deal is, so there's kind of two main ways. One is with a limited partnership, and then a second is via a corporation. I would say for our listeners that the simplest way to structure a deal is via a corporation, where the corporation owns the apartment building and only owns that one apartment building. Of course, the bank needs a guarantor, so I become a guarantor for the project. And then the passive investors, so it depends on the deal, they own a share of the property. And then whatever that split is, they own actual shares. So they, as directly as possible, they own a piece of the actual building. So regardless if we refinance or such, they get paid out the profits. And then for us, we don't take any, we don't mark up anything. So in terms of handyman or property management or anything like that, we pass that on at cost to our investors. So basically, we only make money if the building makes money.
Right. Do you take an asset management fee, acquisition fee, anything?
So typically we just do like a piece of the rental to pay our staff for administration, but otherwise it's all a cost.
Right.
Yeah.
And then property management, is that in-house? Is that third party?
It's a bit of a blend. So we have a teams established in all the cities, and for the emergencies, yes, we leverage a property management company and calls, but for the day-to-day, that's our team doing the work. It's just because it's, I found that it's, once we have a presence in the city, and then we have our own people that do the things that continue to repeat themselves, like cleaning and the garbage and handyman and all that stuff. It's just the costs, because of the size of the portfolio, they get driven down quite a bit.
And you already mentioned about like utilities and property taxes going up. I imagine your payroll has inflated as well, naturally, with this inflation the way it is.
It is. But you know what? Actually, over COVID, something weird happened. Before COVID, we were paying a certain amount of money per unit. And then because everybody was talking about delays, increasing costs, we hyper-focused on how can we reduce the costs of renovating each unit. We actually brought down the cost of our units by about 20%.
Sorry, repairs and maintenance or?
Renovation of an entire unit.
Wow. What did you do?
So we just got a dedicated team. And then some of the suppliers, eliminated some of the middlemen from the suppliers. So basically got more direct, and then promised more volume, which happened. And it was just because there was just this fear of how we're going to do this if our costs escalate like crazy. So just hyper focused on that. How do I reduce costs there? And they actually went down over a period of 3 years.
Right.
Which was odd. I didn't expect that.
Right.
But it's just trying to work with whatever you're given. Yeah. And sometimes it works out really well.
I've been saying lately on my platforms how middle people are at risk with the way things are these days.
But I feel like I'm a middle person, meaning like you said, middle people like in the middle here trying to survive. Like I always have this.
You're the asset owner. How are you the middle person?
Oh, maybe you talked about kind of like people working towards to make a living and to better their life situation.
Oh, no, I don't mean middle class. Okay. Middle class people are in a lot of trouble if they don't own assets. But that's not what I was getting at. I was more getting at like I've posted a couple times. I think a lot of realtors and mortgage people that service investors are
okay.
They some of them are middle people and.
Oh, that's what you mean. Okay, I get it.
Like they're they get. Their how they get paid just adds to the expense of the investor, and there's lots of investors looking to save costs.
Especially if they get more volume, right? Why not order 10 kitchens direct from the supplier at the same time? Yeah,
because you were already doing significant volume. You have a lot of stuff.
So we're just going direct more, and storing that stuff, which helped a lot.
Mm-hmm. Yeah, you met my friend Caleb West. He's actually he's in construction, so he told me about that. Like they were ordering containers directly from China, from the manufacturer for their builds. Yeah. And they save so much money because there's so many middle people got cut out.
Yeah, you've got to learn from the REITs, right? Yeah. They order skids of flooring at a time from China.
Well, these guys are ordering shipping containers full of materials, right, directly from the manufacturers.
Yeah.
That's what I mean. Like a lot of middle people are at risk with just relationships, technology. Right.
But for the smaller investor, kind of building relationships with your supplier, I think will drive your costs down too. Mm-hmm. Like if you forecast, okay, I'm going to do, 3 units this year and build that relationship, I think you can kind of work with people to bring your costs down too.
Yeah, when product sales are coming up, for example, and if you have the ability to store, that can work.
Yeah.
So Adam's question was, you okay? We're a little over time. You okay?
Sure.
Adam's question was, what would you do today investing? Because again, we have a lot of younger investors on the show who are like under the age of 30. Say you have $100,000 saved.
Can I talk about mindset a little bit? Because I think that's super important. Because to me, the mechanics of it is the 20%, and then 80% of it is the mindset.
Right.
And for me, I underestimated how difficult it would be to transition into this from being like a poor immigrant. Yeah. Right. That mindset shift took a lot of books, mentors, and such. So I don't know if you know my story, but
I know your story. Listener doesn't know.
we
please go ahead.
So we grew up in Poland until I was 10 years old, and
what city?
It was Gdynia, which is Tri-Cities in the north of Poland, and it was communist at the time. So the economy was extremely unstable. I remember going to the store to buy an ice cream for 20 zloty, right, which is their currency.
Is it still their currency?
It is, but it's stabilized significantly because they entered the European Union in 2004.
And they're not in the euro? Sorry.
No.
Oh, they're still not in the euro. Okay.
No.
Yeah.
No. We'll leave that aside. Why not?
Yeah.
But so I used to go to the store and something would. I remember for 10 zloty get an ice cream. And then it was like those machine-made ice creams, and then they added a bunch of water to it. So if you tilted like 6 degrees, it would just like.
Right. So a version of shrinkflation,
right?
Yeah. It's
and the next day we go, and then today it costs 20.
Wait, sorry. Over
a day.
Over a day.
Over
Doubled.
a day. Today's 20.
Same water content, or do they up that too?
Thing. Same water. No, product didn't get better.
Or worse. It didn't get worse either. Just cost double.
And then
how's that for inflation?
And then
listeners?
a week later, it would cost 30, right?
Oh my
so
God.
So I saw my parents like frantically, whenever they got money, because my dad was a chief engineer on a cargo ship. They would frantically spend it so quickly, and we would wait there was a huge lineup, and products weren't readily available. You would go to the meat shop, and then there were rations and such, so you couldn't buy whatever you wanted, and it was mostly stores were empty. But there was a huge lineup. It was a 2-hour lineup, and then my mom would say, "Go, kids, go line up!" And then I'm gonna go to the front line and see what they're selling. Right? So they were selling a TV. Just one type of TV. And my dad's, okay, we're buying it. And we had a TV. But the TV wouldn't lose value as quickly as the money. So we would buy anything. Like just anything to have, like that's more tangible.
Yeah.
Right? Because the economy is so unpredictable.
Right.
And just cash burns your hands literally, because you need to buy whatever. Mm-hmm. A bottle of vodka is better than having money, because it's always tangible, something. Right. And the US dollar was extremely expensive and uncommon in Poland, so it's more about what kind of products can we get to, and then
because ideally you would have bought US dollars over a TV.
The best thing were the rejects, the products rejected from the West. So some factories made like these nice clothing that would go to like the Western Europe, but they were rejected by the manufacturer, so they would sell in Poland. It was just so nice and everything like that. So people would buy that up like crazy. Yeah. But anyway, my parents decided that enough is enough. So somehow it wasn't easy to get passports. So I remember my mom bringing like kilograms of coffee that my father bought outside of the country, because he was allowed one of the few people that are allowed to leave, because they were trading with India and Europe and such, right?
So he was allowed to get off the ship.
Yeah.
You're saying the other people weren't allowed to get off the ship?
No, most people weren't allowed to leave the country.
Right. Yeah.
But because he had the job, he was able to get off the ship and then actually buy foreign products.
So sorry, I need the history lesson. Was it the neighboring countries that didn't want the Polish, or your government was trying to keep you there?
The government was trying to keep people there because they would never come back.
Right. Yeah.
Right? So they wouldn't let.
Because living was so hard, you'd seek other opportunity elsewhere.
Exactly.
Communism. Yeah.
So
I joke, because when people say on social media, Canada's going to the communists, like, you've never lived under communism. Sorry, continue. You have.
So then he would bring back like coffee and then products, and I'm like, why are you bringing so much? And a lot of it was
genius
for bribes, right?
Oh, shit. Okay.
Which so we had this like big coffee. My mom comes.
It's currency. It's essentially
my
currency.
mom comes to the passport office.
Yeah.
Nobody could get a passport, and he's like, here you go. Here's a nice like whatever European coffee, and boom, we got passports a week later. Right?
So you used it for currency, for barter, basically.
But everybody did it, so it's not like
well, yeah, because nobody wants the money. What would you rather take? People were probably lining up for European coffee too, not just TVs. So that's value.
It's hard to imagine, but we all had enough food and everything like that. Yeah. Like everybody was well fed and such. It's just more about there's no possibility of getting ahead.
There's no savings.
Right.
Yeah. Let alone investing. Well, how do you save? You don't want to save that currency. It's devaluing.
So we were kind of, our parents said, we're going on vacation to Norway. Mm-hmm. So Norway, okay, awesome. So we're on a way in a car. My sister, she was 16. I was 10 years old. And then 1 hour before hitting the border, they said, by the way, we're actually going to be escaping the country. And I don't know why you would tell a 16-year-old, 10-year-old that military police and border guards are an hour away, that you're actually leaving illegally.
Yeah, I wouldn't have told them.
But they did. So my sister started crying because she left her boyfriend at home. but somehow we got through, and then we got to Norway, and it was like a whole different world. We lived there for a little bit. They didn't let us stay there, but then my dad got out. We got an option to move to Australia and Canada, and because my dad's had one university friend living in Canada, that kind of set the rest of my life. That's why I'm here.
Wow. How grateful are your parents for Canada?
You know what? It was a crazy journey, and where I'm getting to this, it's just keeping something in your life that kind of drives you. And for me, it drives me because my father, a mechanical engineer, chief engineer, was delivering pizza, right? When we got to Canada, and then also working in a factory, and so humbling, right? Because he's always kind of educated and very studious, and delivering pizza for $2 tips. I mean, come on, it's so crazy.
Well, he has
so seeing that,
his skill is so needed here as a mechanical engineer. I mean, on a ship, like that's massively needed here.
It is, but it's not as easy, right?
Yeah.
So then later he actually got into like drafting and such, but that kind of showed me that, you know what, this is kind of a crazy opportunity that I need to do more. So it drives me every single day just to do more and be more. So for younger people that are starting out, just find something that drives you, right? Even if it's, you know what, life is short and we need to make things happen. Do you want to struggle for the rest of your life, or do you want to make something, right? Realize so if someone has like some money, you said 100 grand they have. Yeah, just look at, buy something or anything with calculated risk. I don't even care where it is, as long as it's good real estate that makes sense economically, right? I don't, something that will bring cash flow though. Like, you don't get into negative cash flow situations, which I think a lot of people do in hopes that something will happen. But a lot of that, what happens if you buy a negative cash flowing property, it's kind of tough on a psyche too, because every month you see kind of that money eroding away, but you don't necessarily see that property appreciating. And appreciating is on paper, and bank account is real. So something that will propel you and then help you emotionally to like the investment, because if you're cash flowing negative on a condo, you're gonna hate that condo.
Yeah. And your spouse is going to hate you for doing that deal.
Yes. No matter what you think it's going to be worth in 5 years, and who knows what it's going to be worth in 5 years.
I already spoke to someone who had 2 pre-construction condos. I think he was losing $1,400 on them each, and he lost his job.
Oh, that's so hard.
Right. And so the point is, if it's negative cash flow, it is so much more risk than a positive cash flow property.
Yeah.
Right. Because positive cash flow property, you don't have to worry about it.
Absolutely. I mean, and if here it's not possible, maybe it's possible somewhere else, or even the US or whatever. But it's got to be, you got to have a healthy relationship with your investment.
Yeah, because it'll keep your relationship with your partner healthy.
Right. And then there's plenty of space and plenty of places in US and Canada where you can invest $100 grand in cash flow, for sure. Maybe it's not in your backyard, but it could be somewhere else.
Now, what are you looking at doing in the States?
Same thing. So I'm very disciplined, and we're looking at multifamily because of the cap rates, because of the opportunities. I like the states that I think you do as well, that have good tenant laws that are favorable to landlords. So I kind of like to diversify a bit outside of Canada.
Do you have any, what's different about the U.S. investing for you then versus what you're doing locally? Are you finding better affordability? Because in general, for example, like the vacancy rates are higher generally in the States, just generally, than in Canada. I keep reading that the vacancy rate is shrinking in Alberta, Edmonton, Calgary, while rents and prices are going up.
Yeah.
What do you have any target markets or properties in mind in the States?
So right now I don't have any specific spots. We're kind of looking at a few different ones, but it will be the same kind of model where it's value add 50 plus unit buildings. and just continue to kind of crank those out. But we'll pick a location, and I don't like to kind of pepper my investments around, because we want to build up a team in that city. And like I mentioned, we have a blended team between property management and our people, so we have to have some kind of scale
in that city. Yeah, so you're going to build it. You're gonna scale in one location.
So same thing, different city.
Right.
But there's a little bit of a currency risk because the currency may shift between Canadian and US, right? Plus we're not citizens or residents over there, so things are a little bit more difficult to start up, but not impossible. Like you've done it.
Yeah, but mine's passive investing, and like my wife, so she can help you, give you some advice on that too. On the structure and stuff like that.
Yeah. So same thing. Always kind of multifamily, same tenant type, similar type of areas too. Right. But I think it's going to be exciting. Because
I'm excited. Yeah.
There's one Alberta, and then in the US there are many Albertas.
Yeah, I think people forget that as well. Like we have, I think how many cities of our population? I think we have 3 or 4 cities with a population over 2 million in Canada. Whereas the States has lots of them.
Yeah.
Right. Yeah. Like you and I like big cities. Like there's only so many big cities in Canada.
Yeah, absolutely.
Yeah. Now I mentioned to you before. Another time we were talking about because you belong to Entrepreneurs Organization.
Yes.
Like I do.
Yes.
Who referred you to Entrepreneurs Organization originally?
You know what? It was no one referred me.
Oh, you found it on your own.
Yeah, someone kind of told me there might be an organization like it.
Interesting.
So I actually didn't get referred into it.
Well, kinda.
So someone from within the organization didn't refer me into it.
But word of mouth got to you.
Yeah. And it's a wonderful organization.
Yeah.
I like the fact that it's more of a supportive mastermind of / community of people that help each other to do business and then mean well. Yeah.
Are you reaching out to other EO members in the States on your US due diligence?
Not yet. I've talked, so I've done it a little bit, but not to the point where just starting to, I would say, that journey in the US. But I have done it in elsewhere, like across Canada.
I know the finance chair for Atlanta, in case you're looking in Georgia. Oh, he manages 800 doors, his business. So
okay.
Yeah.
Okay, good.
Yeah, and that's the cool thing about having these community and network of nice people.
Yeah.
Because my experience with EO they've been like the frequency of nice people is just extremely high. Right.
Because you have to be more helpful and open and want to be. So I was actually going to join a different organization, which I won't mention. Nothing bad about them, but they are more of a coaching, strict kind of let's get you to the next level. But for me, I wanted to be part of a community, right? Because it's harder and harder to find people that are driven, that have achieved something, and that you can kind of collaborate with, bounce ideas off.
Yeah, and then everyone's been screened because to be a part of EO, you have to have $1 million US revenue.
Right.
So then they've achieved something, right? And again, my experience is people are really nice. So and you don't always find that everywhere you go.
It's a unique community. I would say it's just because sometimes we and with our friends feel like a little bit of an oddball because you're doing all this stuff and then being driven and then coming up with new ideas all the time, and then in that kind of environment everybody's kind of coming up with new ideas, everybody's doing talking stuff about what they've done to develop themselves, and then at the same time are super helpful too. So no, definitely an awesome community.
Yeah, it's been fun.
What a gem.
And then you're in, we call it forum, but outside people call it mastermind groups, and you're in the mastermind group forum with my wife.
Yes, that's been very helpful. It's been, it's a great group. Yeah, absolutely. There's nothing like people selflessly helping each other bonding and forming friendships.
Yeah. Watch out for her when you guys are in Miami.
Okay. Will do.
Amazing. Any final thoughts you want to share? Anything we haven't covered?
You know what I would say is
Cold plunge? No.
real estate. Cold plunge. Oh, I love cold plunging. So I discovered it during COVID. And it's I've read I took a course and then read a book by this guy Wim Hof.
Wim Hof, yeah.
Wim Hof, this crazy old guy, but it seems like he's
special, man. I don't know how he does it. He's inhuman.
Yeah, it's kind of weird, but there seems to be science around it that it's good for the cardiovascular system.
Yeah.
And
you feel good.
And
End of the day, that's what
plunging
matters.
feels like it's just such a euphoria when you leave the water, and then there's just this crazy energy around it. It's like you're high on your own dopamine. It's
that's cool.
it's pretty amazing feeling. So I do it one for health reasons, but keep in mind you only need to cold plunge for up to 2 minutes, which sounds crazy, but you can do it.
Work your way up to it. This isn't medical advice, folks. You probably want to do this under supervision the first few times.
Don't talk to your doctor, whatever. But I try to always push the boundaries, right? Because to see if I can stay longer, and it's more of a mental. And I'm thinking sometimes, like I take a cold shower. Like I haven't taken a hot shower unless I'm sick in about 3 years. And when I take that cold shower every morning, I'm thinking, if I can do this, I can do anything. So it's more of a pickup, I would say, to the day. So it's part of my kind of workout health routine, cold plunging.
Amazing.
Continuously.
I imagine you're doing this under supervision as well if you're testing your limits. Like you can't just pass out in Lake Ontario.
Oh no, we do it in groups of people.
Got it.
Yeah, it's all like a good environment where people have done it for a longer period of time. So so no, just don't go out and start swimming in the middle of Lake Ontario in the winter. No.
If you want to look up like anything else you wanted to cover? This is before I threw out a cold plunging. Any final words?
I would say, you know what I hear a lot from real estate from I guess working professionals, you know what, like I hate my job and then I'm in between jobs or whatever, I can always do real estate. Real estate, especially at a bigger level, it's not easy. So it's not easier than your job. I actually think it's a lot harder because there are more risks and such. And
if you do math, you'll know. You'll find it. You'll find out.
So it seems like the shows they made it, there's like romance around it, around real estate, around flipping.
There's no romance being a landlord. Sorry.
But it becomes, I would say, if you don't like it, it becomes old pretty fast. So thinking about, like, if you're thinking about real estate investing, to what degree do you want to get into it and why? Right? Is it to save up for a retirement? Is it to save up for your income? But remember, it's not if it was easy, everybody would own thousands of units, but it's not. So putting aside the ego and saying, no, the number of units is just a number, but what I currently need and what do I love to do in my life, and what real estate, what role is it going to play in my life? Because you want to be happy, right? That's at the end of the day, everybody wants to be happy. But if you're, let's say, doing something where you're miserable, then figure out another way to incorporate it into your life or not. So don't treat it as like an escape. Be conscious of, because I hear this all the time. Oh, you know what? I don't like my business. I could always do real estate. I heard flips are good.
God. Where'd they learn that from? Not this show.
So get into real estate. It's amazing. I mean, so many people made money in real estate. Yeah. I mean, people don't know, but Arnold Schwarzenegger, I heard him speak, and he made, when he was bodybuilding, he was saving every dime to buy real estate, and then that's how he got rich. So he could choose the roles wisely and build his career as an actor, to have choices.
Yeah, he mentions it in that Netflix special on Arnold. It's actually really good. Have you seen it?
Yeah. that I've seen.
Yeah.
No,
So
it's
I
great.
highly recommend everyone do it because, yeah, like you said, because he had cash flow, he didn't have to do roles he didn't want to do, where he was being like inappropriate roles or whatever.
Yeah.
Right.
Yeah.
So he could be choosy, and whenever you have strength in negotiation, that's generally a good thing. Who would say no to that? To have strength in negotiation.
And look, he wanted to build a life that he liked.
Yeah. Which
right?
was to be a
Versus
Hollywood leading man. Yeah.
Yeah. So that's what I kind of encourage the audience to do too, is think about how do I want to design the life, and then does real estate fit into it, and then how, right? Versus the other way around. I'm escaping from my job because I hate my boss. He's a, whatever.
Mm-hmm.
And I'm going to get into flipping and buy a yacht.
Yeah. Yeah, because the yacht will fix all your happiness issues, right? 'Cause you have a yacht, you have a Lambo, don't you? Screw the overhead.
No, I don't have I live simply. I have everything I need in my life right now. I don't have a lot of stuff. It's just not my thing.
And then where can people? I see there's a schedule a call on your website. So sorry for listeners' benefit, we have Mike's website in our background.
Yeah, the best place.
MikeBeer.ca?
Yeah, MikeBeer.ca, the best place, and that has link to all our social media handles and such. So.
And when they click schedule a call, who do they get? They get your cell phone, or any time of the day,
or they get a form. I would love to take and give people advice, but there's only so much time I have. So.
Oh, now going forward, just tell people to listen to the show.
But definitely do check out the website. I have some educational material and such, and then also info around the investments we're doing now, and then upcoming exciting stuff we're doing in Alberta.
Is any of that on the website right now?
The Alberta stuff, no, not yet.
Okay. And then can people find like past deals or something like?
Definitely, yeah. Past deals. Check out YouTube. There's a lot of I've been doing like hundreds of videos around educational for real estate. Nice. Mostly less specific stuff, but more what I like kind of mindset, how to kind of break through and then form your own journey into real estate investing and apartment deals, why they make sense too.
Part of it makes me a real estate investor because I'm so scared, because I read a lot. I'm familiar with economic collapses, so then, what are you doing to prepare yourself for these things? And even more simply, like the government keeps printing money like crazy. I think I just saw the government created over 5% more money in the last 12 months.
Wow.
Right. So,
but this is experience talking, because you've gone through cycles. You've done stuff that's kind of hurt you a little bit and then benefited you. So you're just a wiser investor, right?
But I'll even just say, like everyone's experiencing inflation. Is anyone happy with where inflation is right now? So the natural questions are, how do I protect myself from inflation? And then, spoiler alert, everything directs you to hard assets. So pick one, whichever one you want, right?
Yeah, go out and buy TVs.
Mike's joking, folks.
Don't do it.
Because when you mentioned it, I remember, like just for my age, like I remember when Greece was falling apart economically, and people were running out, buying everything they could in the Apple store, and appliances. Like stoves, microwaves, laundry machines.
It's crazy.
They're trying to get rid of their drachma, I believe, Greek. I think that's the currency. They're trying to get rid of their currency into something that they could resell.
Yeah.
Because they couldn't because they weren't confident reselling their currency, their own.
That's
currency.
That's what they did in communist Poland. That's exactly what they did. Yeah. But we just went there a couple months ago. It feels like such a Western country. They've gone up and up and up and up, and it's just, you know what? If I didn't have family here or investments, business, I'll probably move there.
My point, though, is where I'm getting is like, like that happened in Greece. Like, I'm pretty sure they're a first world country.
Yeah.
Right? And so, for me, naturally, like, well, how do I prevent this? And like, I'd much rather have gold than a laundry machine or an Apple iPad as my hard asset.
Yeah,
right?
Yeah, of course.
Right, of course, right? Or even Bitcoin. Again, not getting into advice, but
real estate.
For large sums of money, how does real estate not make sense?
Yeah, especially if you have a tenant. Like if it's your own house, nobody pays you rent. It's different. But if you have a cash flowing property, I mean, you make money so many different ways. It's definitely a blessing. And if real estate dips by 10% and goes up 2 years before that goes up by 40%, please don't cry, okay?
It's like that we're recording this today's April 15th, like just last week, how the Japan real estate market and currency just blipped, right, and dropped I think that stock market dropped like 8 or 10% one day. Did nothing to my real estate portfolio. My real estate portfolio didn't blink.
You know what? I get this. Canadians are so used to real estate going up and up and up and up and up continuously that just they're in shock if it goes down by 5 or 10%, like 5% even. And then their stocks will jump and crypto will jump up and down like crazy. But if real estate dips by 5%, we're like, what is happening in this world?
That leads the conversation, it seems. Right, among Canadians, that's what the first thing they talk about. They don't talk about Bitcoin dropping under 50,000 US. They talk about real estate.
Yeah. We have it too good. It's too stable.
And that's why foreign investment keeps coming here. Yeah. All right. One last time, MikeBeer.ca. Thanks, Mike. Thanks so much for coming in and doing
Thanks
this.
for having me. No, absolutely. I've been looking forward. This was amazing. Thanks so much.
Thanks so much.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. The link is also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.